Reserve Bank has been continuously cutting rates. They have brought down repo rates to 4. Indian banks have also followed suit and have started to cut rates. SBI has brought down rates to 4.9%. If you look at the results of all banks in second quarter, the profits have jumped because net interest income has gone up. Net interest rate is nothing but the difference between deposit rates and lending rates. All Indian banks, what they have done is cut deposit rates but keep lending rates constant. Now, there is another class of bank with whom nobody is talking about unless you have read the newspapers today on Mint. Well, let's see what the foreign banks are doing. By foreign banks, I mean foreign-owned banks which have a big presence here like Hong Kong Bank, Citibank, Standard Chartered Bank. Welcome back to Berich. A lot of foreign banks have had a big presence in the Indian retail market since the late 80s. The trend started with Citi. There was ANZ Greenlace, Standard Chartered, Hong Kong Bank and others. ANZ Greenlace vacated the space after the Harshad Mehta scam. It merged its bank with Stanchart, and so Stanchart became the largest private sector bank. Now, in this era where rates are coming down, how are the foreign banks doing? Well, the news is that foreign banks have cut rates even more aggressively than Indian public sector banks and private sector banks. The average rate in a deposit in a foreign banks is between 3.25 to 3.75%. The only outlier is Standard Chartered, which is offering rates between 4.5 to 5, comparable with State Bank of India. Why are they doing this? They are doing this because there is no demand for credit. Foreign banks only operate in two areas. One, they do credit cards and unsecured retail credit, especially to the salaried category. They also give loans to corporates who have transactions with their country of origin. Minimum balance kept in these accounts are huge. These are only affordable by high net worth investors. High net worth investors have other reasons to allow these kind of money to be parked in foreign banks. They need their services in their country of origin. Foreign banks have cut rates deeply because they were encouraging others to withdraw money from their banks. They don't want to be keeping deposits when credit demand is very slow. Up to October this year, deposits have been growing at a rate of 10.5%, while credit is growing at 5.7%. Any banker worth his salt would like the credit and deposit rates to grow evenly so that he can manage his asset and liability. Today, your deposit is a liability for the bank, and that is really going up very fast, while he is not able to lend, and hence his assets are not growing fast. Foreign banks are also, to whomever they are offering loans, foreign banks are offering cheaper loans. This is only to the high-end corporates. For new borrowers, their loan rates have come over 1.75%. This is really cheap compared to what national public sector banks do. They have not cut rates by 1.75% after the Reserve Bank has started to move. Then, where do foreign banks make their money? Foreign banks make their money in non-fund income. They dominate this market. What is a non-fund income? A non-fund income is an income generated by the bank without deploying funds, only on fees. One of the examples is a letter of credit or a bank guarantee. Suppose I am buying something from United States and I want to open a letter of credit. If I go to Citibank and deposit the money and have a deposit with them, they will open a letter of credit. This letter of credit by foreign banks is more important because they are now going to make a lot of money on that. Because if I go to State Bank of India, they need to have a correspondent bank. It used to be the Chemical Bank of America before it got merged into Morgan Chase Manhattan. So instead of going through State Bank of India and a third bank, if I had opened an LC with a Citibank, my supplier there would have opened it up easily. The boom of the software companies in India, software services, also has meant the expansion in the services of foreign private banks, because suppose for Tata Consulting, it is easy to use Citibank in US or Hong Kong Bank in rest of Asia. So these banks are having a field day in dominating the non-fund income. I have given you only an example of a letter of credit. Back guarantee is another example. There are plethora of ways by which a bank can make non-fund income. The non-fund income market in the Indian market is completely dominated by the foreign banks. Private sector banks and public sector banks are trying to take a leaf out of these people. After opening so many ATMs, still pensioners and other people who are not willing to adopt technologies are crowding the banks. The government is also interested in forcing people to use lesser cash. Starting yesterday, November 1st, public sector bank, Bank of Baroda and Axis banks have started levying fees for people who deposit and withdraw cash in the bank. This is a regressive step because most of the people who deposit and withdraw cash are either pensioners or poor or lower middle class people. You are limiting their withdrawal to less than 10,000 rupees a month. If I come to a bank, deposit and withdraw 10,000 rupees, if you are going to levy 40 rupees flat fees, that means if I have to withdraw 400 rupees, I am going to pay 10% of it as fee. This is usury and this is not the way banking can be encouraged in the town. Even if you allow me to use ATM cards, I have to use it in the same bank only. If I use it in a connecting bank, I cannot withdraw more than 3 times in a month. Let me give an example. My wife operates our household. She has a flower vendor who supplies flower every day. She has a milk vendor who dumps milk every day. There's a newspaper vendor. There are housemaids. There's a cook. There's a driver. All of these people were being paid cash. The money was very little, except for the driver. Everybody is less than 5,000 rupees. It makes no sense for me to use banks to transfer money to them or for them to use banks. Now what the government is trying to force us to do, if that is forcing me not to withdraw money because I don't want to pay the service fee. But even if I accept the service fee and withdraw 20,000 rupees to pay them, each of them is going to get 4 or 5,000 rupees. And when they go to deposit in their bank, they are going to be charged again. So you are driving them away from the bank. So the idea of JAM, where you basically connected your bank account with an Aadhaar and a mobile phone, is going to come to a full circle if you are going to levy these kind of fee. And now next is a segregation saying JAM accounts will not be paid, others will pay. Cash withdrawal is a very small portion of the total services a bank provides. It can be subsidized, or banks have to be in a position to open thousands of ATMs, and banks have to absorb these costs for making money. A bank is a compact between the government and a company. Basically, you are allowing the bank to accept public deposits and makes money. The equity is 100 rupees. The loans are 300. You are able to borrow 300 times, 400 times that money and profit from that. The only favor you are doing in exchange is keeping 20% of the borrowings in bank. You have to lend it back to the government of India through bonds. Through regulation, you must make it compulsory that this ridiculous limit of 10,000 should be taken to at least 30,000-40,000 rupees so that the middle class does not suffer. This kind of usurious rates on the middle class will come back to bite authorities sooner or later. What is Google Pay? It links two bank accounts. Google Pay is nothing but linking two bank accounts. So even if the poor have to have a bank account, you are making it prohibitively expensive for me to operate a bank account. See, the poor would like, suppose you are poor, you have to imagine yourself to be poor. You have to live like poor. You try living like a poor for some day, then you will understand. I am not talking about people who are really poor. What I am talking about is people who are in the lower middle class. So they need to have a space of rent for 100 square feet and a common toilet. They will be living in 4,000 rupees. That landlord will want cash. So he has to go. I will pay him by Google Pay, but his landlord is not going to accept Google Pay. He has to pay. Now, there is another scam in this. You and I pay electricity at 5 rupees. The poor are supposed to pay the first 100 units is free, and then they have to pay at 2 or 3 rupees for less than 300 units. But when you go for a rental, these guys, when they go for a rental, there's a flat fee. There is no 100 unit free and all that. So if the flat, if it is, they will be asked to pay 500 rupees. So if I am using 200 units, they will ask me to pay 500 rupees, whereas the owner will pay 300, and I will make a profit of 200 on the electricity also. So the informal economy works only on cash. You cannot say to their landlord. So suppose their landlord is making 20,000 rupees or 15,000 rupees. You can say I'll transfer it to the bank. But somebody who is made shanty rooms where 100 family of 4 are living in 100 square feet, having a common bathroom, you cannot say, when getting that space itself is very difficult, it's a premium. You cannot turn around and say, I will not pay cash, I will transfer in bank. The next guy in the town will replace you. So cash is king. You cannot do anything without cash. Thank you for watching Be Rich. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification. If you use Kindle, you can buy the book using the Kindle link given below. If you want a hard copy, send a message to the WhatsApp number given below and my team would get in touch with you. At the very end, if you want to get in touch with me, please send a mail to berichenglish@gmail.com. I am grateful for your support of Be Rich.